Hey traders, it's John Fortune here with this week's weekly Forex Forecast. Hope everybody's having a great weekend. We are starting with the S&P 500 because last week we started to fail at the major breakout level, which I've been highlighting is most likely going to be the case at some point. And we closed the week back down below this level. Now this is significant because if we are going to continue to fail, as looks likely in the S&P 500 next week, this is going to bring risk off into markets, including Forex markets. So quick look at the economic calendar from last week and you can see why US stocks are beginning to fail at the major breakout level. And CPI came out hotter than expected, headline CPI, and core CPI and the month-on-month came out as expected. But what this showed that the disinflation that we've been seeing in the US has started to stall out. And if we go and have a look at PPI, which very often leads, but not always, leads CPI, we actually had hot readings across the board. And so when you pair this as well with stronger than expected retail sales and the previous strong jobs data we had out of the US, everything is pointing to a bounce in the US economy, and that means that we're likely to see an acceleration, at least in the short term, of inflation. And with that, the Federal Reserve are going to have to do more on the tightening of monetary policy. The terminal rate is likely to go higher, and this is why stocks are beginning to fail at that major breakout level. Coming up this week, we do have President's Day on Monday, which means that markets are likely to be dead on Monday. However, the big pieces of data which are coming out next week are the interest rate decision out of New Zealand, which we're going to be paying attention to. And we're going to have some setups in the video today where you can play that both ways. And aside from that, we also have GDP out of the US and core PCE out of the US on Friday as well. So in terms of short-term trading, really the only event we need to plan our trades around is this interest rate decision out of New Zealand on Wednesday. Okay, so if we look at the scores for the coming week, we can see the New Zealand dollar is the only currency currently below -2, where we have a bearish bias on it and we have that edge. We start to see edge coming in to short in New Zealand dollar. However, as discussed, the slight issue next week is that interest rate decision. So instead of trying to be predictive, what we can do is we're going to look at a number of opportunities where we can trade that both ways after the interest rate decision takes place. But I do favor New Zealand shorts as a preference after that interest rate decision next week. We also have the euro strengthening somewhat. And what this shows is that although the dollar has been bottoming and actually troughed in the scorecards and started to bottom ever since then, it isn't exceptionally bullish just yet. And it still has a little bit of a way to go. And we could actually see the dollar slightly corrective next week and just chopping around. And the final thing to note is the Swiss franc moving into the positive side of the scorecards here. This is the first indication here in the majors that we may be starting the next leg up in the Swiss franc. If you remember in previous videos, we were discussing that consolidation, which we'll look at again, above the major double bottom in the Swiss franc. And now it looks like we may be starting the next leg up. So keep your eye on Swiss franc long positions next week. And in fact, my top two of my favorite pairs next week are Swiss franc longs vis-a-vis the New Zealand, especially after that interest rate decision comes out. And I also like pound franc to the downside as well heading into next week. Aside from the franc pairs, we can also look at pound Aussie to the downside, and also going to be looking at Aussie New Zealand as a potential interest rate decision play, and also euro pound to the upside. That is another market which I'm interested in next week, and euro pound to the upside, pound franc to the downside. These setups are risk off setups. So if we start to see US stocks failing at that major breakout, it's those risk off currency pairs which are most likely going to pay off the back of that. So I favor risk off setups next week. And finally, we're also going to look at some dollar pairs that we can play both ways next week, depending on whether we get dollar strength or weakness, because the dollar itself is still neutral. So there's no outright bias on the dollar. Therefore, we can be more reactive as opposed to being predictive on dollar pairs next week. So a quick look at the individual currencies before moving on to the markets themselves. Starting with the DXY, we did break out of that range between the 2-year breakout and the 7-year breakout, and we actually closed the week above here. So having broken out here now, especially if we start to fail in the S&P 500, and taking into account what we discussed about inflation stalling out, potentially re-accelerating, this is fundamentally bullish for the dollar. So although the dollar is neutral, on balance, as I said, I favor that risk off next week, which is stocks continuing lower, the dollar heading higher, and the risk off currency pairs like pound franc to the downside, euro pound to the upside, outperforming. So I do think we could quite easily head higher next week. And again, like I say, that catalyst which has been driving the dollar is that potential stalling of disinflation or re-acceleration near term in US inflation. Next is the euro. Now, we actually came back and tested a major breakout level in the euro, and we also have this kind of sloping wedge type pattern. So this is why I say going into next week, especially with the dollar kind of neutral, I would not be surprised to see this just bounce higher, and it could just continue to consolidate for a little bit next week. I do not have a very strong bias in the dollar. Overall, I do think the dollar heads higher based on the fundamentals we discussed, but just for next week, I would not be surprised to see the euro bouncing a bit higher, maybe the dollar even consolidating as well. So we will look at euro dollar, and we'll also look at pound dollar. And what I'd like to do with the dollar pairs, because I don't have a strong bias one way or the other, we can look at euro dollar for potential long plays in the dollar if we start to see some dollar weakness. And we can look at pound dollar to the downside if we start to get dollar strength and the dollar breaking out to the upside. Next is the pound. Outside of the New Zealand, this is one of my favorite shorts next week. However, it's not a fantastic short. Why? Because it is only -1 in the scorecard. So it's essentially bearish to neutral. And when you get bearish to neutral currencies, they tend to consolidate. So again, I would not be surprised, as the dollar is bearish to neutral, as the pound is bearish to neutral, I would not be surprised to see this pushing higher and consolidating. If that's the case, there may be an opportunity in euro dollar to the upside next week. But certainly versus the Swiss franc and the euro, I do actually favor further declines in the pound next week. Next is the Swiss franc. Now, the Swiss franc has been neutral in the scorecards, and it's just continued to consolidate, which is exactly what the scorecards are designed to do. If it's neutral, it's telling you that the probabilities are 1 to 4 weeks out, it's going to correct and consolidate. Now we're seeing it move into the positive side of the scorecards. This is usually an indication that these sideways moves, these consolidations, can actually start to break out, and the next leg up is approaching. Now, what's interesting when you compare the probabilities from the scorecards with what we're looking at technically, this was the major double bottom breakout. And in fact, if I just scroll out a little bit, you can see there was the major double bottom breakout. And what's interesting is we have this failed, essentially, head and shoulders reversal last week. And we came down and we reversed and we closed the day above both of these lows down here, a strong reversal day. So very often, and this is, by the way, why you do not trade head and shoulder patterns in strong markets. You trade head and shoulder patterns in weak markets or bear market rallies. So this does look like a number of traders got sucked into this, and then the reversal, and this is very often the kind of setup which can precede sharper moves. So keep your eye out for Swiss franc long trades next week, and it may be the case we're about to start the next leg up, having consolidated, retested the major double bottom breakout, and now getting ready for the next leg up. Next is the yen. The yen is kind of neutral. It's actually bearish to neutral in the scorecards, and on balance I would favor yen shorts because of that, but I do not have a strong outright bias on this. You know, this could rally up next week and then it could continue down like this. Overall, I think we're coming back down to the lows. So just bearish to neutral on the yen. I think there are better opportunities next week. Next is the CAD. The CAD is neutral in the scorecards, and as a currency, it's actually just been moving sideways. So in terms of the technicals here, we've discussed previously, this does look like an A, a B, and a C. And if we can come up and test this level here, this would be a great place to start to look for reversals in the Canadian dollar and, you know, US dollar CAD to the upside, etc. The problem is there is currently a bit of an economic war going on, especially over crude oil between Russia and the US. Russia are cutting supply, and this boosted the price of crude oil. And then the US came out and started to sell 26 million barrels from their strategic reserves. So there is a fight going on over the price of oil, and this is causing that chop. And at the same time, we're seeing the Canadian dollar responding to that. So I don't have a strong bias in the CAD, but I do think in the near term, maybe we start to break down next week. In the near term, we are heading back to the lows. Next is Aussie dollar. I did highlight this head and shoulders breakout. We did confirm the head and shoulders breakout down in this area. And remember, versus the Swiss franc, head and shoulders breakout in a downtrend. Overall, the market is down. So this is exactly the kind of pattern you would want to trade. But again, I would not be surprised just if we came up and we just chopped around for a little bit. So I do think the process of the Australian dollar heading back down towards its lows has started. But that doesn't mean we can't chop about next week, especially as the Australian dollar is stronger than the US dollar in the scorecard. So it's projecting on a 1 to 4 week basis actually a little bit of strength. And finally is New Zealand dollar. We've also broken a head and shoulders pattern here now, which is a reversal pattern to the downside. I do believe, as I've been stating in previous videos, we're coming back down to the lows. We failed to actually make a high here in the New Zealand dollar. So the downtrend overall is still firmly intact. There is no break of the previous high. And really the same with the Australian dollar. Although I do think the process has started for further declines in the New Zealand dollar, there's nothing to say we couldn't bounce a little bit higher next week, especially if we get a bit of strength on the interest rate decision. But overall, I am now looking for this to continue down towards the lows. Okay, so let's look at the markets themselves heading into next week. And crude oil is a market which is, I'm actually neutral on crude oil. However, going into next week, we did have the release of 26 million barrels from the US strategic reserves, and this caused crude oil to sell off. And although I'm neutral, I am bearish to neutral here. So we've broken down below. You can see the previous lows. We've got some momentum. So any pullback in this area, especially if we retest these lows, I would be looking for further declines down to the 73 area roughly. So either this low or this low you can look at. But this is the area, once you start to get into this area, the odds are against you for further downside. Next is pound franc. Now pound franc has started to sell off at the end of last week, as you can see, and it started to correct. We've got this kind of bear flag set up, a little bit of a head and shoulders set up here. So any continued pullback is viewed as an opportunity to look for bearish setups down towards the 1.100 area. And again, this should be considered a max profit taking area because the odds turn against you below this area. Next is euro pound. Now these are my top two setups next week. Why? Because if we are going to get stocks failing next week, this will be risk off. Both of these markets are risk off markets, and the pound is weaker than both the franc and the euro in the scorecards. So we've started to break higher with momentum. As you can see, we broke out and we are making higher highs and higher lows. Any continued pullback next week is simply viewed as an opportunity to look for bullish setups. I'm going to be looking up to the previous high here, roughly at the 0.8980 area. And the final pound pair here is pound Aussie. Now the reason this is not highlighted is because pound Aussie to the downside is actually risk on. And when you get risk on, you tend to see the Aussie outperforming the pound. So what you can do here is next week with these £3 short setups, if we are going to see stocks continue to sell off and we get risk off, you will see the pound franc and the euro pound setup outperforming. However, if that's incorrect and we start to see stocks bouncing, then pound Aussie would be the short that you would want to come to. So again, there's nothing wrong with having a plan. So pound franc to the downside, euro pound to the upside, risk off. But if that's wrong, what are you going to do? Just sitting there twiddling your thumbs, saying, damn, I can't get involved in this because it's going the other way. No, you can come to pound Aussie and you can look for potential shorts, a double top in this area. And any breakout to the downside should be viewed as an opportunity to look further declines down towards the 1.7280 area. Okay, so those are the £3 shorts that I like the best. Pound franc and euro pound on risk off, especially if we get stocks selling off. Those are the two to go to. And if we do get stocks bouncing for whatever reason, then pound Aussie would actually be a better short in that circumstance. So you've got options there to play next week. Moving on to the New Zealand pairs, and the New Zealand pairs are going to be interest rate decisions that you can look at next week. So after the interest rate decision takes place, the first three we're looking at here are based on New Zealand weakness from the interest rate decision. So if we get a correction into the interest rate decision and then we get a sell-off to the downside, you can look for that pullback and follow through into the 0.57 area. Next is Euro New Zealand, up near the highs. So any consolidation or pullback in this market should be viewed next week as the opportunity to look for a breakout to the upside. So again, we get that New Zealand weakness on the interest rate decision, and any pullback from there would be viewed as an opportunity for a follow-through trade, post interest rate decision trade into the 1.7350 area. And the final pair here, based on New Zealand weakness from the interest rate decision, is Aussie New Zealand. You can see we are kind of wedging to the upside here. And if we break the highs with momentum on a weak New Zealand from the interest rate decision, look for this pullback and a retest. And this would be the area to start to look for bullish setups into the 1.1130 area. Okay, so the reverse of that, and I do favor these three here, just as I favor pound franc and euro pound, but the reverse of that, if we for whatever reason get a stronger than expected New Zealand dollar, it would be pound New Zealand to the downside. So the market continues up, and then we get a stronger than expected New Zealand dollar. We break out, because usually form a little bit of a trend early on anyway. We break out, and this kind of pullback would be the post-interest rate decision opportunity down towards the 1.90 area. You could look for this low sitting right in this target area here. And the second market I like being reactive after that interest rate decision would be New Zealand yen. So yen fairly weak, kind of bearish to neutral. Look at the consolidation we have here. Big rally, and we are consolidating above this breakout level here. So going into next week, if we just consolidate into the interest rate decision, which is most likely because markets tend to not really move, the markets which are directly linked to that interest rate decision tend not to move until the interest rate decision. And then you get a stronger than expected New Zealand, you get this momentum. You can look in the back end of the week for this consolidation and then a move into the 85.30 area. Okay, so wrapping up Forex with the $2 pairs here. And again, you can be reactive because the dollar doesn't have a strong bias one way or the other. We do euro dollar every week, but I've wanted to add in pound dollar as well here. So it gives you some options both ways next week. Because again, it's not about being predictive all the time. Sometimes it's better to react to how the market moves, especially if you don't have a strong bias in that market, one way or the other going into the week. So with euro dollar, I would be looking at this to the upside on balance because the euro is actually +2 in the scorecards. And because I have a bullish bias on euro pound, this makes pound dollar to the downside a good opportunity if we actually get some dollar strength. So with euro dollar, if you are looking to trade this, and I would quite happily sit the dollar pairs out. I think these are better markets. But if we continue down and we get a breakup next week, perhaps on the GDP data, you could look for a potential pullback and a move into these highs over here up towards the 1.0850 area. And the final Forex pair here is pound dollar. We are also going to look at gold and silver, which you can also play both ways next week and be reactive. But with pound dollar, I would favor this to the downside. So if we continue to pull back and we correct next week, and then we get a strengthening of the dollar, if it re-accelerates, look for the breakout. And this would be the opportunity I'd be looking for in pound dollar next week into the 1.1850 area. Okay, so wrapping up the video with gold, silver, and Bitcoin. And the gold-silver ratio, you can see gold has been rallying against silver, and I favored gold to the upside versus silver, and I still do going into next week. So because of that, because I favor gold over silver to the upside next week, and at the same time, I have a neutral bias in the dollar, this is another opportunity for us to look at being reactive and potentially playing either silver or gold, one or the other, depending on whether we get dollar strength or weakness next week. So starting with gold, we did trade into the target set last week. Going into this week, if we get dollar weakness, it would be gold I would be looking towards. So what might that look like? Well, we may continue down like this, and then we get a break higher, and any pullback would be viewed as an opportunity to look further advances into the 1890 area. And this high up here is a high we could very well see tested on dollar weakness next week. Next is silver. Now we took out the target set last week and we traded right into this. And this is where I tell you these areas should be max profit taking areas, because 7 times out of 10, you're going to struggle to actually get below these areas. So heading into next week, what I'd like to see here is if we do break higher in silver and we start to push up, but then maybe based on the GDP data, we start to see the dollar strengthening, I would be interested in silver shorts down towards the 20.8 area. So being reactive on the dollar, not just in Forex, but also in gold and silver here, I do think that's the best course of action next week, since the dollar itself is currently neutral. And finally, we have Bitcoin. We've seen some strength coming into Bitcoin, and I've been saying recently I don't have a strong bias on Bitcoin, and I still do not have a strong bias on Bitcoin. I haven't been trading Bitcoin, quite happy to sit this out. However, if Bitcoin is going to continue higher, any pullback in this area and a break higher, the max profit taking area would be roughly the 27,000 area. But just bear in mind, if we get stocks breaking lower next week and we see risk off coming into markets, Bitcoin is going to struggle to go higher. So we're in this situation with Bitcoin where it's currently bullish near term. However, we could be seeing risk off coming into the markets, which would cap upside in Bitcoin. So hence why I don't have a strong bias on Bitcoin one way or the other. And I don't really see any real edge in trading Bitcoin as it currently stands. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.